Hey you guys, hope everybody's doing well today. Hope you had a great week. Stock market was kind of messing with us this week, so hopefully you were able to take advantage of some of the volatility. If you're into options, we're kind of in some pain, but it's okay. Today we are going over the QYLD versus GW series. If you're new here and not familiar with the series, I'll link the playlist up above and down below. But essentially what this is I'm trying to find a way to generate income off a smaller portfolio than what the mainstream financial community would say you need to retire on. So I'm basing it on $250,000. That's probably a very realistic number that I can get to in a very short period of time, less than 10 years. I can probably get there. And I want to find a way to be able to stretch that dollar, be able to live comfortably. I'm not a high on the hog type person. Me and my wife are real simplistic, more, real just normal people. I don't know how else to put that. But we are planning on retiring, buying an RV, hitting the road, and traveling America on a small budget. I mean, we're not going to, like I said, live high on the hog, but we want to travel and see this country. So I'm trying to find ways to make money while we're out there, whether that's through dividends, covered calls, cash secured puts, YouTube, affiliate income. All that is going to help, right? So that's what this series was, is to see how you can make $250,000 give you a steady income, right? So if that interests you, like, share, subscribe, do all that good stuff. Down in the pinned comment down below is all those affiliate links I was speaking about. The M1 Finance one, I think it's open. Well, it says it's good to the end of February for the $30, but it's the weekend, so I don't know. I'll put it in there, but if it's $10 or $30, it's still a good deal. But of course, 30 is better. Yeah. Support me down there, use the Amazon links and all that good stuff. So, all right, so let's get into it. So right here, so what this basically is I assembled a portfolio with $250,000. Okay. One side, I put stocks in it. The other side, I just put the whole thing in QYLD, $250,000. On the stock side of it, I kept some cash to the side. I think I had originally spent $200,000 on stocks, and I put $50,000 to the side. And the goal was for both sides to get $2,500 per month. And for the most part, they all have done it. But, just FYI, this is not an apples to apples comparison, and I'm changing it as we go. QYLD has consistently got us $2,500 a month, but on that side there was no cash. There was no cash cushion. On the stock side, there was some months that didn't give us $2,500, but we had around $50,000 in cash roughly to pull from in those light months. So what I'm going to be doing going forward is I'm going to be changing the stock side a little bit to try to reflect a little bit more of a easier way to do things. And more, not quite, but more of an apples to apples comparison from this side to the QYLD side, if that makes sense. So I'm trying to get my QQQ ETF built up. I'm trying to get some of these shares called out of the portfolio, and I want to see how that works so that it's less work to do right on the stock side, because right now we got about 13 positions, and it's a lot of work to actually manage all those, sell all the cash covered calls and all that good stuff. So for the month of February, there was one stock that got called away from last update, and that was Canadian Imperial Bank, and that got called away at $90. So we had to put $9,000 back into cash. I did not reinvest that into something else this time. What I did this time was, like I said, I was trying to get some of these shares called away. So what I ended up doing was on Monday, this past Monday, I sold. So now this is fictional account, just so you guys know. This is just paper account. I don't have this kind of money. I'm not big baller yet. But what I did on Monday was I tried to sell all these contracts for these covered calls in the money or at the money. Okay. And of course, the market has pulled back this whole week. But we did collect some good premium. So, like for instance, AT&T, we'll go through most of these. I sold it at $29.50. I think on Monday, AT&T was at $29. Well, we got $57 per contract and 7 contracts out of that. So we pulled almost $400 out of that one. Verizon was in the 56s, I think, and I sold a strike 57, got 83 per contract for 2 contracts there. Kellogg, I sold a $60 strike, got 110 per contract, 3 contracts there. QQQ, this is the one I want to hold, so I didn't sell it at the money, but I did sell a 345 strike, collected $95 and 2 contracts there. Altria Group, I sold a 44.50, got $104 per contract on that for 3 contracts. Gilead Sciences, looks like they took a dump here this week. I sold a strike at $64.50, $140 per contract for 3 contracts. Pfizer, same thing, it's been just going down. I sold a $34.50 strike at $72 per 2 contracts. 3M has been just kind of holding steady. I sold a $177.50, $360 for that 1 contract. WP Carey, which is a REIT, they've been recovering a little bit. Sold a 70 strike for $80 for 2 contracts there. IBM sold a 121, $300 per contract there for 1. Cisco Systems, I sold a 45.50, 112 per contract for 4 contracts there. And for PPL Utilities, I sold a 28 strike, $30 per contract for 7 contracts. So a grand total of $3,439 in covered call income for the month. Now, you add that to the monthly average of the dividend, and you end up with $4,186 that we collected for the month. Now, this is the month that I'm trying to get out of these positions, and the market fell back, so I don't know. We still got till March 19th to see if these will get called away. But we only have an income need of $2,500 per month. That leaves us with a surplus of $1,600.86. So our cash position last week was $41,615. We had that one stock that got called away for $9,000. So that went to the cash bucket plus the $1,686. So right now we have $52,301.69 in the cash bucket. So far for the year, we've collected $26,330.67 from the call side, from the stock side, I should say, and the total stocks and cash of this portfolio is $280,611.69. Now we'll go over to the QYLD side, and this one is simple to do. We currently have 12,293 shares of QYLD. They paid a 23.3 cent dividend for the month of February. and that got us a total of $2,864.27. Now, I was reinvesting the excess back into QYLD. What I'm going to do for a little while is take this excess and try to build a cash cushion for QYLD just in case. And so for the past 2 months, we've done that. And so we have a cash cushion of $676.90. Over the 10 months, we've collected $26,866.50. So just, what is that? Just a little bit more than the individual stock side, but the individual stock side, I just sold a bunch at the money. So one thing I didn't do is update the dividend amount. So I did do that. I had it at 260 before. Now they're estimating it at 280. It's kind of hard to estimate QYLD because they change every month. But the estimate now is $2.80, which would give you an annual income estimated $34,420, monthly average of $2868.37. So on this side, the total stocks and cash is $276, $40.10. So just a little bit shy of the stock side of 280. So, but like I said, I'm going to be changing this stock side up a little bit. I'm happy with both sides. I would probably do a hybrid of both. If I were to just stick with this strategy, I'd probably do a hybrid of both of them, just so that I'm not completely exposed into QYLD, to have a little bit more diversity. So also, I'll be selling cash secured puts. So I'm very comfortable. I'm very comfortable with that number, $250,000, to be able to retire, because I can sell cash secured puts, have a small portfolio of ETFs, maybe, getting me maybe QYLD, NUSI, that type of thing, getting me some guaranteed monthly income, and, having YouTube and a side hustle, things like that. I'm very comfortable actually with $250,000 retiring on. I know that's not what the mainstream financial community will have you believe, that you absolutely need $1 million, otherwise you're going to be eating cat food or something. It's hogwash, and I think I'm proving that here. Is it easy? No. Are you going to have to make some sacrifices? Yes. But it's not doom and gloom if you don't have $1 million in your portfolio before you retire. So, I'm optimistic. Hope you guys are too. Hope you enjoy this. If you do, please leave me a like, share the video, subscribe, comment down below. I would appreciate it. You guys have a great weekend, and we'll talk to you later. Thanks. Bye-bye. I am not a financial advisor. The information contained in this video is for entertainment and informational purposes only. It is not intended to be investment advice. Please seek a licensed professional for any investment, tax, or legal advice. Thank you.